On All About Stocks this week, as the benchmarks rally over 2%, will give you an investment strategy that you can use. Prakash Diwan tells you why you should be investing in Hindustan Sanitary Ware and Industries Limited for the long term. Welcome to All About Stocks. Thank you so much for joining us. I'm Souza. Now, we did see some profit booking on Friday, but we've seen the market on the whole move up about 2%. Over the next half hour, we'll tell you what your investment strategy should be in these markets, what stocks would give you the best returns. If you have questions about your stocks, feel free to write to us. Our email ID is at the bottom of your screen. Let me first bring in my colleague Ajay, who will give us the latest update on Dalal Street. Ajay, take us through what happened.
Well, Faye, another very strong week for Indian equities. The benchmarks rallied about 2%. The bigger party was actually going on in the broader markets, with the mid-cap index rising about 3.5%. The small-cap index rose about 6.25%. In fact, for the mid-cap index, it was a fresh yearly high. So some amount of damage control. In fact, the second straight week of gains coming in for Indian markets. Remember, we had corrected almost 9.5% from recent highs of close to 9,200 on the Nifty. So from that, it has entered the second week. Something to watch out for this particular week was the non-participatives end of the market was coming back in action. Reliance Industries, that's a big underperformer, rose about 10% this week and lent a lot of support to the market. Banks, which was overall sluggish. In fact, banks did not really participate last week's up move. This time we saw some amount of private sector bank participation coming back. But the 2 points which triggered this rally was, of course, participation from this end of the market and global cues turning out to be extremely positive. It all started by some dovish commentary from Jane Yellen last week, but then talk of China stimulus, the Japanese economy, the market surging to 15-year highs, European market rally, all of that combined lent a lot of support to Indian markets. Most of the strategists say that now the worst as far as how bad the fourth quarter numbers could be, perhaps in the price. But from here on, traders are recommending tight stop losses because in general the fourth quarter numbers are expected to be extremely weak ones. Of course, one point which was cushioning the market was the FI-DI participation, which was very healthy this particular week as well.
All right, Ajay, thank you for that update. Joining us today is Prakash Diwan, Director at Altamount Capital Management. Prakash, thank you so much for joining us. Interesting rebound at the market, but we were talking before the show started. You said there's the pain is not over. You expect a harder cut perhaps in the future? Tell me where you're coming from.
Yeah, I mean, I know it sounds slightly contrarian to the kind of mood that's been prevalent this week. And mind you, it's not just, in a simplistic assumption that earnings are going to be bad. That possibly has been factored in already, because everybody thinks earnings are going to be bad. And I would be surprised if earnings surprise us in certain counters, or certain sectors. Particularly the likes of capital goods and all could see some sort of a revival in the last quarter. Where I think the market is probably not paying too much attention is that a lot of liquidity that's come in has, is time bound of sorts, and once either you finish your tenor of liquidity in the market, which is a year, 2 years or whatever, or if you meet your milestone, you need to take money out. And given the kind of emergence of attractiveness in Brazil and Mexico, I think we are kind of taking it for granted that our only competition to capital is China. So there's a lot of money that could move there in anticipation of a firming of the US interest rates, which is just about 3, 4, 6 months down the line. So people will start factoring that in. And I think a lot of money will move out. We've not seen FIs pull out as yet. Throughout March we saw there was money trickling in, if not like pouring in. But it was the local players and the so-called HNI segment that pulled money out. So my sense is the profit booking is still there. There's enough meat on the bone in a lot of large counters, particularly which are comprising the Sensex and the Nifty. That's where you will see the biggest impact. Mid-caps could probably continue doing slightly better.
By when do you expect to see this sort of impact?
Difficult to put a timeline, but I think within the next 4 to 6 weeks, we should see that kind of a shakeout. Look at the market even now. I mean, it's not... Yeah, it's moved up, but it kind of isn't racing up, back with the same pace. It faces hurdles. Every 50 points is a challenge. And there's profit booking that comes in. You have such a lot of volatility through the day. So between the high and the low points of the market, if you see, it's at least about 100 points on the Nifty almost every day. Which means that the market is very undecided of sorts. It's not a secular trend. So it's higher tops, higher bottoms, as technical analysts love to call it. So it means the trend is upwards, but it's not a straight line trend. And which is where I think...
How bad do you expect that cut to be? Are we talking about 8,000? We're talking below 8,000?
Possibly, yes. I mean, I don't think
Possibly below 8,000 on the Nifty.
Yes, so it sounds like really drastic. I know a lot of people would not like hearing this. And that's exactly why it's important to keep on booking profits on your investments in markets like these. Because we are at the cusp of real execution of a lot of change. Look at all the positive news flow that we've seen the market getting sold into. Right from the first interest rate cut in Jan, to the budget, to the second interest rate cut announcement, to the Moody's upgrade. Yes. Everywhere you've seen somebody coming and selling, not really buying. So it shows that people who have been wise enough to invest into our markets last year would want to book profits.
Okay, so tell me this, so you did say that there's a technical view on all of this. From a fundamental point of view, if I'm holding a portfolio at this point, would you recommend I book profits, hold some cash and wait for an opportunity to get back in? That's the advice you're giving.
Yes, so I'm not saying cash out and completely, empty your demat account, this thing. But there are significant, quantums of profit that people are sitting on, and especially in the mid-cap space, because they are more vulnerable to any kind of a cut that you would see. So we've seen that even in the last reduction to 8,300 levels, a lot of mid-caps lost ground. Of course, they're catching up again, and there are always newer players, a newer set of stocks that start doing better in the upturn. So you may not see the same stocks revive themselves with the same intensity. So you need to make sure that you have cash to get into the right segment.
We know RBI did not cut rates, but banks have suddenly started to move on passing that rate on, or cutting base rates, allowing their lending rates to come down a little bit. Where will this impact be felt? Because this is something we've been waiting for a while. Where will the impact be felt strongest?
I think the best segment which is likely to benefit out of this is housing finance companies. Couple of reasons. This has also been very well timed. If you see the introduction of the real estate regulator bill, that's something like, in a nice quiet neighborhood, you now set up a police station as well, which means the neighborhood becomes safer to live in, and there is going to be more demand for people to come there, which means if I am on the brink, I am on the fence, and I haven't bought a house for whatever reasons, I hear about interest rates coming down. My banker calls me up saying, the EMIs, look at the change in the EMI.
Yes.
As a consumer, I'm not worried whether it's 9.5 or it's 9.75 or whatever. But to me, if the EMI becomes much more approachable, affordable, and I get to know that this is a guy, this is a developer who's going to be policed on my behalf by somebody, and I'm not going to risking it and shooting in the dark, I take a quicker decision.
What's your pick right now among the housing finance companies?
I think if you see, there are a lot of them which are good, different segments, but DHFL seems to be poised to take off earlier than the others. But I still won't let something like GIC Housing Finance go by, because valuation-wise it's much easier. Canfin is shot up quite dramatically, but it still has enough momentum.
A few questions right now. Ram has written in, he has 800 shares of NMDC, which he bought at 205 rupees on an average. He wants to know if he should hold on to that stock. Let's pull that stock up. It ended the week at about 135. Now, the government plans to divest 10% stake in the company. Given the response we saw for REC, would you recommend he holds on to NMDC?
Apart from the OFS, I think NMDC itself as a company is also getting into that stage where the change in environment, the regulatory environment, the policy framework will help this company grow rapidly. It's been a disappointment, let's face it. It's not something that has really delivered. And it's sitting on assets which are extremely promising. So if those things happen in the right way, he could get his $200 and much more beyond that. So the OFS only probably brings in more confidence, if it goes the way the REC issue has. So I think he should hold on. I know it's a long way from where he is, but still.
Yeah, but hold on anyways. Arjun has written in. Now, Arjun wants to know if he should be buying Tata Steel at the current levels. Tata Steel ended the week at 342 rupees. Prakash, you have Tata Steel in your portfolio, and you've shown so much faith in this stock for so long, in this entire, sort of downside we've seen on all commodities and especially steel companies. Would you recommend he buys Tata Steel at these levels?
I would believe so. I still am a believer that Tata Steel would turn around, not just to, and wouldn't have to wait for the overall global commodity cycle to turn around and China to take off and stuff like that. within India itself, the kind of demand for steel is going to be very high. Especially what Tata Steel makes is more infrastructure, more real estate driven, usage driven steel. So that's where, they'll benefit. They have capacities which they can, ramp up very quickly without adding too much of capital expenditure. You look at where Tata Steel has moved from the 315, 320 levels. Suddenly, you've seen this spurt. In fact, the last few days of the week, it's been about 5%, 3% up on certain days as well. So I see that revival of sort in terms of interest coming back. It's definitely a buy.
All right. So if I pull one key, thought in all of this, you're talking about the fact that real estate will see, construction will at least see some sort of a revival in India. Cap goods, real estate, this sort of thing, which then brings me to Prakash's recommendation on his stock for this week. We asked him to pick a stock for us, and he picked Hindustan Sanitary Ware and Industries. Now, that stock ended the week at 467. Now, this is a ceramics and granite company. Well, Prakash, using this as a proxy for the construction industry right now?
To a large extent, yes. I see a lot of fresh housing demand come in. And of course, the products that HSIL specialize in get used right at the end. It is towards the delivery, it's not towards the beginning of a project. I see a lot of projects nearing that where, a lot of half-baked inventory is going to get furnished.
Finished, yeah.
And these products there'll be a huge demand for this. Secondly, you look at what's happening on the entire ethos of sanitation across the country. I mean, you have television campaigns talking about putting up, toilets in the house and stuff like that. And we almost like virtually triggering off an internal rebellion, through these ads. What's going to happen is companies like these who are already well poised need to just kind of introduce products at lower price points as well. While they are aiming for premiumization on an overall strategy basis, with higher end and fancier designs and all that, they could very well do the lower end price points also, and that means your capacity utilization, the way you sweat your assets is much more.
I have one very quick question for you. I mean, you did point out the fact that there are a lot of projects that are stalled right now that you expect will complete. But unfortunately, within the real estate sector, there isn't too much hope of that liquidity coming in and them being able to finish projects that are stalled, even with the regulator in place. The question is of cash and sales in order to finish off projects that are currently stalled, and because inventory is so high right now, it's unlikely anybody will launch any new projects for a while.
Yeah, so it's not new projects. It's, as you said, the key word is sales. The moment there is sales on the ground, people are willing to start paying. I mean, I know of a lot of people who booked apartments but not stopped paying. They don't mind the interest burden, if whatever nominal 17, 18%. They say, but I'm not going to get stuck with a property which I can't sell. So people will come back because of two reasons. One is, as people get much more secure with jobs and with businesses, today there's a change in the environment. If you ask people, they're slightly better off than what they were last year in terms of, not so-called achhe din or whatever, but they feel there is something which is happening in the market which makes you feel that my business should be at least better than last year. Whether it's equity, whether it's, industry, whether it's, industrialization, whether it's a auto dealership, everybody's looking slightly more positive. Secondly, if interest rates go down, as I said, the EMI effect is very positive. So that will bring sales and hence the completion.
What's your target on the stock?
HSIL, I think, on a SOT, they by the way also have a glass division which is very profitable for them. They pack a lot of beer and alcohol and a lot of perfume and cosmetics in that.
And if the economy is going to be improving and everybody's in a good mood.
That's already doing very well. That's doing well thanks to the insulated business that it is. But I think 550 is what we added it up from a SOTP basis, given both the businesses doing well.
All right, 550, that's the target on Hindustan Sanitary Ware and Industries Limited. Stay tuned. After the break, we'll take a look at Prakash's own portfolio. We'll talk about stocks like Coal India and ITC. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Thank you for staying with us. Prakash Diwan is with us as well, and we're going to take a look at Prakash's portfolio. Now, this portfolio is at an overall gain of 33% from November 2012. The Nifty over the same period is up 49%. I'm going to give you a list of the stocks in this portfolio. Gujarat Pipavav, which is up 250%. Tech Mahindra, RIL, we talked about that some time ago. Cipla, Coal India, ITC, M&M, Tata Steel. Prakash, I know we talked about a couple of things. We talked about the fact that you believe that investors should book some profits, stay in cash, and you believe that we should be holding on to RIL and Tata Steel. Let's talk about Coal India, because that's a kind of, that's a stock that's been testing patience as well. Would you recommend holding on to it? Would you want to exit it? What do you want to do?
No, I think finally it's time to kind of take a call there, because not because there's too much of disappointment there beyond what it has already shown, but my sense is there would be better opportunities with the cash at lower levels of the market. And I'm not saying, cash out of all stocks, as I said earlier. The ones that are not performing, get out of those, because Coal India, if it comes down, it's going to take much longer to come back even to these levels. And that's my fear. It could take it on the chin and not recover very easily. Look at the entire coal auction thing. It's already done. Everything's over. Coal India still hasn't got any gains out of it. It's not become a different entity in terms of promise. So I think I would rather get into something else now. It still is a promising business, but the stock is not promising enough.
So if you're selling out of Coal India, would you like to hold the cash right now?
Yes, at this point, yes, because it's in alignment with my belief that the markets could shed a lot of 8-10% from here, especially the large cap companies.
All right, so that money is going to stay in cash. This is Prakash's portfolio right now: Gujarat Power Port, Tata Steel, Tech Mahindra, RIL, Cipla, ITC, M&M, and of course he's holding 10% in cash, because Prakash is of the view right now that we will see a deeper cut in the market that will give us an opportunity to use that cash. If you have questions about this portfolio, write to us on the email ID that's on the bottom of your screen as well. Rahul has written in, Prakash, he wants to know if he should buy Bajaj Auto at current levels for the long term. If we pull up that stock, the stock ended the week at 2,098. Now, I'm not really sure why he's chosen Bajaj Auto, if he's particularly sentimental about the two-wheeler industry. But would you recommend a different form of auto altogether?
Yeah, people are getting attracted to Bajaj Auto for a couple of reasons. One, it's quite close to its all-time low, a 52-week low of whatever, 19 or something. Secondly, the launch of the RE6 or whatever, that compact car. But if compact cars are anything to go by, I don't think we are in a great trajectory there. So I would rather stay in a Maruti, which is the most resilient of all auto players, be it four-wheelers or two-wheelers. I mean, cars continue to be sold, and remember, we are talking about a government that's going to be spending so much on building roads and connectivity, not on the main highways, but it's off those main highways, which are the pockets where a Maruti is going to be bought. So people could be waiting for roads to happen before buying cars. Bikes they anyways buy without roads, but cars is when the roads come in, the cars follow. So I think Maruti is a much better bet.
Right,
and disclosure is I have it on my personal portfolio also.
All right, so that's Maruti. That's a recommendation for you. Ravi has written in. He says he holds 1,300 shares of Biocon, which he bought at 466 rupees. Should he hold on to that stock? The stock ended the week at 467. So he's making a profit of 1 rupee and 10 paise on his stock. But I know that you have always, had a positive outlook on Biocon. Hold on to that stock.
Yes, absolutely. And this whole thing getting closer to the Syngene IPO could make a lot of sense.
All right, so hold that stock as well. Let me take a few more questions. Ajit has written in. Now, Ajit wants to know about Reliance Capital. He has 100 shares, which he bought at an average of 490, and 100 shares of Ipca Labs, which he bought at an average of 680. Should he hold on to both of those stocks? Let's talk about Reliance Capital first. About 455 is where it's at. Hold on to that stock?
I don't think so. I mean, within the BFSI space, NBFCs, particularly the ones which are into too much of service-based businesses like Reliance Capital, I think this team's already over. I think housing finance, microfinance, these are pockets, and vehicle finance, these are what will do well. So Reliance Cap is not in any of those in the portfolios. So for me, and I'm somehow not very convinced whether they've got any more positive triggers apart from selling out stake to some Japanese companies all the way. So.
All right, what about Ipca Labs?
Oh yes, this is a turnaround in the making. It's had, of course, its fair share of shocks, but he's bought it just close to the current market price, about 680 or whatever. So, the turnaround could be very sharp in this case, and it's a great company. They're very serious and focused about their business. It's just that, Ranbaxy, Ipca, some of them have had some bad times with the US regulators, but that should pass.
All right. We're going to take one last question before we go into break. Suresh Prabhu has written in. He has 175 shares of Federal Bank, which he bought at 150 rupees. He also holds HCL Tech at 990. Should he hold on to both of those stocks? Let's talk about HCL Tech first. And I know that almost every guest who's been on the show has said there's a lot more steam left in HCL Tech, so hold on to it. Do you agree?
I do. In spite of the caution, yes, I do. See, large cap companies are managing investor expectations very well. So it's not that, it's doom speak in the sector or something. But even the small cap companies have started following suit, which is a nice thing that the industry is taking on a higher standard of transparency, sharing with investors.
Oddly enough, on a week when we saw the Satyam case finally close.
No, that was a coincidence because that was something which the Supreme Court had to figure out when to do it. But HCL Tech did this last quarter also and they came through fairly well. I mean, very well, in fact. So I don't think people are going to take that very seriously. The stock's already rebounded from that cut that we saw last week. So it's definitely a positive.
Federal Bank?
Yes. I think the right space, the right size, M&A could be very favorable for this bank.
All right. So hold on to both Federal Bank and HCL Tech. And if you'd like to ask us about your stocks, email ID is at the bottom of your screen. We're going to take a very quick break. When we come back, we'll talk about stocks like Axis Bank and TVS Motors. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Prakash Diwan is with us and it's time for us to look at our lucky viewers portfolio. This week, our viewer is Sundareshan. He sent us a list of stocks and he wants to know which of these he should be holding on to. So Prakash, the first on his list is IOB, which he bought at 80 rupees. He's lost a fair amount of money already. Hold on to that stock. Do you think it's time for him to cut his losses?
He should cut his loss. I know it's a bad start, but he'll have to do that because IOB could slip further and not have any respite in coming back to the 80 levels.
All right. He also has 10 shares of TVS Motors, which he bought at 304 rupees. Now, TVS Motors is down about roughly 50 rupees from where he bought it.
Yeah.
And given what you were saying about, the two-wheeler sector in general, would you recommend he exit this stock as well?
Yes. I'm quite negative on TVS, not for any other reason, but it's run up quite a bit and now they're facing enough hurdles to grow their market share. And Bajaj has started some predatory pricing, especially on dealer commissions and all, wherever TVS is active. That's a direct competition that they've taken on. So I think it should, he should move out and, as I said, move to a Maruti or something.
All right. He also has 10 shares of Axis Bank bought at 550 rupees. Hold on to Axis Bank, I'm sure.
Yes, yes. So this is one of the star private sector banks available at low valuations. He'll probably even add up if he wants to, but definitely it will deliver.
Also 10 shares of ITC, which he bought at 330. Hold on to ITC?
Certainly. I think the way it's moved back to this 340, 45 levels, it shows that resilience. People have got used to the new price hike and continue smoking, so I don't see why ITC will also not go back to those glory days.
All right, 10 shares of Dish TV bought at 80 rupees. Hold on to Dish TV as well then.
Oh, absolutely. Hold it, and then I think this is a great rewarding story. In terms of content and distribution, both they've got the combination right, so you could see much higher levels very soon.
All right, I'm required to ask you a disclosure. What do you hold right now among the stocks that you talked about?
Maruti particularly is the one I remember discussing and I have in my personal portfolio. But the rest of the stocks we have in our client portfolios for sure.
Yes.
I may not have directly personal exposure to any of this.
So Prakash, thank you so much for spending time with us this week. It's always a pleasure to have you on All About Stocks. Now, if you have questions for us or for Prakash, write to us. Email ID is at the bottom of your screen and you can reach me personally on Twitter as well. Thank you so much for watching.